Hello traders and welcome to another video review. Today is Wednesday, the last day of August 2022. Let's find out what's going on the Forex calendar today. There are some important data today scheduled for release, but first let's start with Chinese data. Manufacturing PMI published already overnight had beat the expectations of 49.2 with the actual reading of 49.4, which is better than the previous reading of 49. So nice important data from the manufacturing production of the China. What else do we have today? German unemployment change for now. The previous reading was 48,000 people. Forecast is 26,000 people, so unemployment change should drop in Germany, and this data will be published 5 minutes to 10. One of the most important data today is, of course, the CPI, Consumer Price Index data from the Eurozone. This data is scheduled for release at 11 o'clock, and the market participants expect an increase from 8.9% to 9.0%. So 0.1% increase is being expected. Is that enough? Maybe that will not be quite enough as a CPI increase, and market participants might get expected if the CPI will be bigger than 9%. The bigger the CPI, the more pressure is on the ECB to hike the interest rate. Data from the US and Canada will be published during the New York session. First, ADP Non-Farm Unemployment Change, scheduled for release 15 minutes after 2 o'clock. 128,000 was the previous reading. This time we expect 288, so very big increase in ADP Non-Farm Employment Change. Gross domestic product of Canada will be published at 2:30, and the market participants expect an increase from 0% to 0.1%. Crude oil inventories for all of you crude oil traders will be published at 4:30, and as you can see, this data are very in favor of the stronger crude oil move to the upside again. So what do we have here on the calendar? Looks very important, looks very interesting, so please stay focused today, stay vigilant, because we have plenty of important data scheduled for release during the day. So let's start with the data from the cryptocurrency market. First, let's take a look at the Ethereum. Why we are looking at the Ethereum at the beginning? Because there is important move to the upside on the Ethereum. As you can see, the previous bounce was 12.67%. Okay, and now the recent bounce from the lows of 1,423 is already 13.67%, so it's 1% more. What's a little bit less optimistic for bulls is that we are testing this channel upper line here around the level of 1,618. So we need a breakout. We need a very strong breakout above this channel line, and we need to test 1,654. This is the next technical resistance, and of course ideally the level of 1,722 would be tested and violated in order to confirm the bottom at the level of 1,423. So please keep an eye on the Ethereum. Here, let's take a look at the US dollar to the Japanese yen. What is going on there? As we can see here on a 4-hour chart of the US dollar to Japanese yen, let's switch to the daily. This is very extended move to the upside on this we broke above 100% of the extension of the wave wave A measured from the lows of the wave B. Right now we tested the 127%, which is at 138.42. This level was violated as well. The next target is at 161%, which is located at 140.21. However, please notice the fact that this might be wave 1, this might be wave 2, and that might be wave 3. If we break above 139.38 and hit 140.21, ABC will be changed to 1, 2, 3, 4, and 5 impulsive scenario, because of course this is very unusual for this kind of market to have the wave C extended above 161%, above the top of the recent long-term trend, and then after the wave B is made, another wave C to the downside should be expected. Now please consider the fact that we might see some sort of the correction to the downside if this market will stop around 139.38. However, on the other hand, we might see a breakout to the upside, and then this scenario is invalidated. Euro to the Japanese yen daily time frame chart is showing us some kind of a relief rally to the upside. However, this rally is not that strong as the real impulsive rally. We just got tested the level of 138.50. Then there's a slight breakout to the new local high, 139.16. However, this is not a typical impulsive rally. So despite the fact that momentum is right now at the level of 56 points, so it's a strong bullish momentum, this is only ABC to the upside. This is free wave rally here, and it might be very soon terminated, and the market might go back below the 30-day moving average, which is now at the level of 137.27. So that's the situation on the euro to Japanese yen. Let's take a look at the British pound to Japanese yen. As you can see, not much is going on this market, because this zone here, let me just add a couple of levels. This zone here is still intact, so the market trades inside a very narrow consolidation zone. This zone is around located between the levels of roughly 163.91, and it's been like that since the beginning of the August. So this is all this situation here is the August price action. However, there is a visible pressure from bears, because as you can see, we got long upper shadows here, and the market, after it broke out of this supposed to be triangle pattern, is still under the 30-day moving average. So it's a very important moving average here to be focused on. If we break below 160.38, 160.02, then of course there is a chance that the low from the 2nd of the August located at 159.41 is violated, and then the next target is 157.98. So please stay focused for a valid breakout out of this consolidation zone on the British pound to Japanese yen. Because of the crude oil inventories, let's find out what's going on the crude oil. Crude oil made on a daily time frame a very interesting pattern. Just let me just zoom in and take a look at this. What do we have here is a typical bearish engulfing pattern into the supply zone. So the market tried to let me just zoom out. Market just tried to break out of this wedge. Okay, however, it didn't actually work as planned. Of course, we might treat this big candle here as a test of the breakout. However, if the market goes back to the wedge again, then please consider the situation as a bearish, because we are again below the 30-day moving average, for example, and we were pushed out of the supply zone. Momentum already negative, however it's not a really big number, 47 points. So if there is a push to the downside and the momentum is going towards the level of 30, then we know that the bears are angry and they want lower prices of crude oil. So please consider this situation as a first clue of incoming bearish pressure, or maybe more intensified bearish pressure as the market tries to rally above 98.35. Didn't happen yet. It might not happen at all, because the bearish pressure looks like it's going to be increased every time bulls try to break above this level. We have the first reaction here. Market was pushed to the new swing low. We have the rebound, then it was pushed lower. We have another rebound, and a big massive candle here was made at the end of this bounce here, so it might be considered as the bearish engulfing pattern, which is apparently a clue, a signal for the market participants that the bears are really in charge of this market, and they want lower prices of the crude oil. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.